Holy smokers, folks, a lot to talk about in today's video. Oh my gosh, okay. Oh man, I woke up today and I was like, I lost a bunch of money again, man. It's 2022. Wake up every day. Market's massively red. We lose money. But I woke up and I was like, wait, am I still dreaming? What's going on? Like the markets are all absolutely green. Holy smokers, this ain't no jokers. Dow's up big. S&P 500's up big. Russell's up big. Nasdaq's up very nicely. Like, whoa, we actually got a green day. I pull up stocks and I'm like, wow, look at all these green moves. This is a thing of beauty. We haven't had one of these since maybe last year. It seems like it's been a little while, right? And then all of a sudden, holy smokers, this ain't no joke, you got to be flipping my flapjacks. Tesla, 7.5% down there, selling Tesla stock in mass right now. I mean, they are just dumping Tesla shares left and right and putting massive selling pressure on the stock. They're selling it, okay? Now, let's talk about Tesla. Then I want to talk about the markets. Then I want to talk about, show you some very important things. So if you're thinking about, is this a real recovery day? Is this a fake recovery day? I got some very important things I want to show you in this video here today, okay? But let's start it out here talking about Tesla, everything going on here. As always, much love. I appreciate everybody for joining me, okay? So Tesla's down massive today. First off, I'm taking a screenshot way before the market's going to close. So I don't know, Tesla might hit over 100 million shares traded hands here today with just an overwhelming selling pressure on the stock. And, keep in mind, when you're talking about a market cap that big and you're talking about a stock price move this big, my gosh. Now think about if the market was down, let's say the NASDAQ was down 2.5%. What's the move for Tesla today? It would be down double-digit percentage today. I mean, for a stock like this to go down that much on this massive of a green day, I'm telling you, like, if the market was down to 2.5% today, Tesla would be down probably 11% today, if not 12%, if not 13%, which is crazy for a company this big with this sort of market cap, okay? So there's a lot going on here. First off, the company had AI Day over the weekend, all right? Now, some people were playing the stock from a short-term perspective. We know Tesla. People like to play from not just the long-term perspective and thinking about the next 5-10 years with Tesla. A lot of people traders like to get in the stock and play it on events, okay? So the AI Day happened, okay? Now, what got everybody's attention AI Day? Got everybody's attention in a very negative way. And what got everybody's attention on the AI Day was this robot, okay? Now, for Tesla standards, this is not good quality. Let's just call it that, okay? Now, for any other company, this would be amazing that they could put something like this together. But for Tesla, the bar is way different, okay? I can tell you this robot isn't even remotely close to like the caliber of what Boston Dynamics has right now. If you don't know what Boston Dynamics robots can do, they're on a whole different level. Now, Tesla can certainly catch up to Boston Dynamics and get there, but I can tell you right now, from people looking at this, anybody that knows anything about the robotics industry is like, wow, that's nothing for a company like Tesla to put something like that together. So overall, that was like, oh, okay, we got that going on, okay? I think something they could have done to have bettered the situation is I think they could have made the robot look a little better, to be quite honest. And I mean, it's kind of, just imagine if instead of showing off, remember when they showed off the Model 3? Imagine if instead of showing off the Model 3 and, they didn't paint the car, or they had some ugly rims on it or something like that. Like, of course you wouldn't do that. So, I was just surprised that they showed it with all the wires and things like that. Like, it is what it is. They're not ready to sell it right now. But that left all excitement, because when it comes to Tesla, people are expecting amazing. That robot simply was not amazing by any standards if you keep up to date with these sorts of things, okay? But that was just the start, the tip of the iceberg in regards to this whole Tesla situation. So Tesla announced deliveries and production numbers, all right? Now, the narrative by Wall Street is starting to be very negative, okay? They say logistics not to blame for Tesla deliveries miss. There's a much bigger reason. Tesla stock getting hammered after weaker than expected third quarter delivery numbers. Wall Street seems to believe the shortfall was due to logistics. This isn't what investors are worried about, however. They're worried about demand, okay? So if you don't know the numbers, third quarter deliveries as far as production came in at 343,000 and 365,000 in terms of deliveries and production there. And Wall Street was expecting about 358. So obviously a miss there, right? Now the narrative is all of a sudden Tesla doesn't have the sort of demand to meet Wall Street numbers and Wall Street expectations, things like that, right? And I think 2023, we're going to get a better understanding of where Tesla's short-term demand is. Long-term Tesla demand is through the roof, right? But in terms of 2022, remember, a lot of these cars that are being sold in 2022, similar to kind of the housing market, these were orders that were placed in 2021. And so I think that's something important for all folks, whether you're bearish, bullish, or in between on Tesla. You got to understand that most of these orders that are being fulfilled, a lot of them were placed last year at the very beginning of this year when interest rates were really low, when people were still feeling very confident. And obviously, everything's changed massively since the beginning of this year, right? The market's all sold off massively. Interest rates have gone insane. People's confidence has gone down in a massive way. And so I think 2023 we'll get a better understanding about Tesla's short-term demand, right? But in terms of this, I mean, we all know Tesla's demand for the long term is absolutely ridiculous. But the problem is Tesla's expected to have something like 43% revenue growth next year for this company, right? And so, you're looking at the stock now down 38% year to date. And we're going to come back to the stock price a little later in the video because that's going to be very important for everybody to understand kind of what's going on here. But, for a company that has expectations of revenue being up 40% plus next year, if there's any sort of worry about demand, people freak out, okay? And when I say people, it's Wall Street mostly freaking out. I doubt it's retail selling heavy today. This is likely a Wall Street-driven sell-off here, right? And they're going to absolutely flip out because they're saying, oh my gosh, maybe there's potential demand problems there. And if there are, how's Tesla going to grow 40% plus? And remember, Tesla's numbers are getting so big at this point in time, right? And there's a few different reasons, problems Tesla has in terms of the 2023 numbers. China lockdown situation, we don't know what's going on with that, right? Hopefully that's ended soon here and is ending, but at the same time, you never know if that can come back. You never know what that's doing to the economy in China, and that's a whole mess. Europe is in a bad place right now. We know that, and it looks like it's getting in a worse place as we speak. So that's not ideal. And then obviously in the United States, consumer confidence has gone down in a massive way. We know that, right? And, in terms of if you're going to take out a loan, rates have shot up massively. And so for all those reasons, Tesla's numbers are if they somehow hit those numbers next year, I don't think anybody could ever doubt Tesla for the rest of human history. I mean, it's just be ridiculous. But I think there are concerns. And even myself as a Tesla bull and a big Tesla shareholder, I have real concerns on if they're going to be able to grow revenue 40% plus in 23. Should be getting Cybertruck at some point in 23, so that's good news. That should boost up numbers. But just kind of looking at the interest rate environment, low confidence, things like that, I definitely have my concerns as well. And when it comes to a lot of the Wall Street money, they're usually looking out for these stocks over the next 6 months. And so they're thinking about where's Tesla stock going over the next 6 months. And if they feel like they're pretty confident it's going much lower over the next 6 months, they're going to put massive selling pressure on it, right? As a retail investor, we're thinking about the next 6 years with Tesla. And we're like, if the stock price goes down in the short term, we'll just buy more shares or hold or whatever, right? For Wall Street, they think very differently. They'll sell. Like literally they'll sell. And that's exactly what you see playing out today. Obviously a massive kind of sell-off in that stock. But I think it's very important with certain companies, you got to, keep your eye focused on the long term with those. And that's kind of, what I like to do there. Now, this is a big issue. I don't know how many of you guys are keeping up to date with this, but this is extremely important. And if you're thinking about one of those events in the stock market that could cause everybody to absolutely lose their mind, this Credit Suisse situation is getting a little crazy, okay? So the Credit Suisse stock, it paired their losses. It was down as much as 10%. The stock's been getting absolutely obliterated. Shares of Credit Suisse took a swing after earlier plunging as much as 10% on Monday, as the Financial Times reported the Swiss bank's executives are in talks with its major investors to reassure them amid rising concerns over the Swiss lender's financial health. Spreads of the bank's credit default swaps, oh boy, okay? When you start hearing credit default swaps, it just starts bringing back memories of 08, 09, right? Spreads of the bank's credit default swaps, which provides investors with protection against financial risks such as default, rose sharply on Friday. They followed reports that the Swiss lender is looking to raise capital, citing a memo from its chief executive, right? Now, they're obviously reassuring investors that everything's okay. It's nothing probably too much to worry about here, okay? But I don't think anybody really trusts that in a major way. Now, why would people not trust that, okay? Well, think about it. remember what happened in 08, 09. Well, we'll come back to that in just a minute, okay? In terms of its stock price, it's very telling. It's very telling what's going on there, right? For Credit Suisse to be going down like that, like, what are we doing? Going to penny stock level? Holy smokes, this ain't no jokes, okay? I trust that you are not confusing our day-to-day stock price performance with the strong capital base and liquidity position of the banks as a CEO. Okay. Does anybody believe that, right? Because here's the thing. If you go back to the great financial crisis and you look at Bear Stearns, Lehman Brothers, AIG, I mean, all of them believed they were just in a fine position, right? They believed everything was okay. Their stock prices were plummeting. There was starting to be a lot of worries on Wall Street about AIG and Lehman Brothers and Bear Stearns and many others in that space, right? And potential systemic problems there. But the executives of those companies felt like everything was usually okay until very last minute with those companies. And I mean, it was very last minute. It was all of a sudden like, no, everything's fine. It's just our stock price are going down. Till all of a sudden it was like, we might be going bankrupt. And we are going bankrupt. It happened really, really quick. It's almost similar to kind of what you saw play out in the crypto lending space when a bunch of those crypto companies went under, right? Back in the springtime. Into early summer. Very similar situation happened in the banking sector in 08, 09. And so when you see something like Credit Suisse and you see the executives of the company saying, don't confuse the stock price with our liquidity position, we're just fine, but yet they're trying to raise capital. And then all of a sudden you're thinking, okay, we've fallen for this before, right? And if Credit Suisse was to really get damaged, I mean, who's to say there's not systemic problems and it doesn't take down another? So that's why it's a risk to the entire financial system, right? And so this is something that you definitely have to pay attention to and just keep an eye on. And if you look at some of the big banks, I mean, they're kind of very telling in themselves. Look at JP Morgan stocks down 33% plus this year, despite it being the most well-respected, just best bank out there you can possibly own, right? But yet the stock price is down significantly. I think part of that is obviously Wall Street's very weak right now. No IPOs coming to market, things like that, right? Obviously lending activity is likely plummeting right now. And so that's not good for JP Morgan. But if there's systemic risk there in terms of other problems in the finance sector, I mean, and JP Morgan could get hit even more. Now, do keep in mind, right? If any other smaller players go under, they'll likely be acquired by bigger players, and branches or divisions of those companies that are maybe in different countries could get acquired. That's something you saw with JP Morgan actually in the great financial crisis. They acquired assets. There were so many banks that were going under that basically the government kind of forced a lot of the biggest banks to acquire some of these assets, and they got the assets for pennies on the dollar, right? And obviously what happened is almost all those companies got actually exponentially bigger than where they were previously before that whole situation, right? Now, if you're thinking about the VIX, right, because everybody's felt like, okay, we're in a market crash, but we can't end the market crash until we get the VIX to go through some massive capitulation stage and have the VIX go 40 plus, if not 50 plus, right? But the problem is we haven't had anything in the market to really force us to go 40 plus in the VIX. Even if earnings come out a little weak, which we'll talk about that in just a moment, right? You're not going to get VIX 40 plus. If you're going to talk about VIX 40 plus, you need shock and awe events. Rona was a shock and awe event. VIX goes 40 plus in March of 2020, right? The great financial crisis when also Bear Stearns, Lehman Brothers, and those were going under. Yeah, the VIX went, 40 plus, way over that, right? Because it was shock and awe events. So in order to get that VIX massive spike, if you're looking for that, you need a shock and awe event. Obviously, there's a whole geopolitical situation, and we don't need to get into that in this video. That's a risk that if something really went south there, right, then you could be talking about VIX 40 plus. Or if something like a Credit Suisse all of a sudden failed, let's say, and that led to more credit concerns in the overall banking sector and systemic problems there, then all of a sudden you could be talking about that VIX 40 plus, right? But you need, everybody's so fixated on that, you need shock and awe if you're going to actually get a VIX. And we can bottom the market, no problem, without the VIX going 40 plus. It's not like the only way we can bottom the market is if we go VIX 40 plus. No, it doesn't work like that, okay? Now, one of the issues with obviously being a great day in the markets here today, is it brings up all these oil and gas stocks, and people start getting bullish on commodities again on these green days and things like that. And I mean, look at my oil and gas stocks list. I mean, the moves are ridiculous. 5, 7, 8, 9, 10% moves, right? But of course, the market could be down huge tomorrow, and oil's down huge, and guess what? All those gains are erased. So it is something to keep in mind. It's just a one-day gain, but that's the danger we're kind of in this market short term, is we need to see inflation keep coming down, but if the market kind of goes a little more risk on, there's a higher probability that commodities pump into that. If commodities go higher, there's a higher probability of inflation being stickier, right? And so that's just something that I think everybody needs to kind of keep in mind there. And so it's kind of a weird position where you kind of have to almost root against the market in the short term as a long-term investor, not just so you can buy stocks for cheaper, but you kind of have to root against it so commodities keep going down. And that's just it's a funny kind of position to be in there, right? Now, I spoke about this before, and the two final bosses, right, Apple and Tesla. And in terms of these stocks, they've obviously started to fall apart recently. This is a 5-day on these. Apple's down 7% plus. Tesla's down almost 14%. These are the two final bosses. They have held up very well this year until recently, like literally the past 5 days. Until this time, those stocks had held up tremendous. Everything else had been obliterated in the market pretty much. And yet those two stocks, the final bosses, have held up pretty darn well, right? And this is another thing that people look at, as we can't bottom out this market until the two final bosses have fallen. Well, they're definitely falling. Now, it's not it's a debate of if they're going to fall a lot more or not, but things are definitely trending the right way. I mean, that's a vicious sell-off. And those sorts of companies in a 5-day span, oh my gosh, okay, never mind if today was a big down day for the market. Tesla would be, like I said, Tesla would actually be sitting at probably a 16% down on a 5-day, and Apple would be sitting at a 9 or 10% down on a 5-day. That's something to keep in mind there, right? Now, with that being said, it is important that everybody remembers that the market is getting very cheap now at this point in time, okay? Large caps are falling. We'll see if they continue to fall. Obviously, we got the one nice move up today. I wouldn't mind it if large caps continue to fall, to be quite honest. But things are getting much more attractive than we've seen them in a long time, to be honest, when it comes to large caps. I mean, take away the Rona crash, right? Because that happened to snap of fingers. So we got down here in December 2018, bear market, right, in lower. But outside of that, you got to really go back to kind of 2013, 2014 range to find large caps trading this cheap. So things have actually gotten compelling on the large cap side now at this point in time. So, okay, things are definitely trending the right way. If we can get large caps to sell off even more, that's even a better situation, okay? Mid caps are trading at 11.1 forward P right now, which if you look at the past 20 plus years, this is over 2 decades we're looking at here. I mean, the only time you're going to find it cheaper literally is in the depths of the great financial crisis at the end of 2008 and into the beginning of 2009 when I was in college. That's a long dang time ago, okay? Small caps are at a 10.6 forward P right now. The only time in history, or at least the last few decades, you're going to find them trading this cheap is, once again, in the depths of the great financial crisis at the very end of 08 and into the beginning of 09. So in terms of these, can they get cheaper? Sure. They can always get cheaper, right? But this is why you're seeing some small caps already have bottomed out now at this point in time. Despite the market, on Friday, pretty much all the indexes hit new lows. But why is it that some stocks have already bottomed? This is a way these markets work out. Everybody assumes sometimes, falsely, that everything goes down at the same time and then everything comes back at the same time. No, okay? In every single crash, you can see this play out. You could look at this in the great financial crisis, it played out this way. You could look at this in the tech bubble crash in the early 2000s. This is the same thing that happened. Amazon stock bottomed 1 year and 1 month. 1 year and 1 month before the market bottomed. Think about that for a moment. Amazon did, right? Which Amazon back then was just a small kind of joke company. That's the way a lot of people treated it, right? And 1 year and 1 month. And so just keep that in mind, that there's going to be stocks that perform amazing over the next year, and it doesn't matter what's going on in the market, to be quite frank. The market could go nowhere. The NASDAQ could go down 10% over the next year. And there's going to be some stocks that go up 40, 50, 60, 70%. You're in a different stage of this game now at this point in time in regards to this bear market, crash market, whatever you want to call it, okay? Now, I was just watching actually a little bit of CNBC a few minutes ago, and I loved what I heard. Oh, I loved it so much, okay? They had this lady on, obviously Wall Streeter, like all of them that go on there, and she was speaking about how her expectations are, really low for JP Morgan's earnings and the other bank earnings, okay? And if you don't know, the banks are starting to come out with earnings all next week, okay? Now, I love hearing that. I absolutely love the expectations going into this earnings season, okay? Not just around banks, but around companies in general, very low. Very low. And when you are setting up expectations so low into a market that's sold off heavy, into a market where, midterms are coming in, usually the market does historically phenomenal in November, December, I think we're setting up in a I'll just call it very interesting dynamic here. Because if the banks come in, it's decent, it's not the end of the world. Big tech comes in, it's decent. Like if we just run through big tech earnings, are we going to have any disasters? Well, there's Apple, right? I don't think we're going to have a disaster from Apple. There's Microsoft. I don't think we're going to have a disaster from Microsoft. There's Meta. I don't think we're going to have a disaster. The Meta's expectations are on the floor. If they just say, hey, we sold 2 bananas, stock's going to go up 20%. Like, that's good, right? Amazon, are we going to have a disaster with Amazon? I don't think so. Google? I don't think so. So I don't think there's anything lurking for the big game-changing stocks that move the market in this coming earnings season that's going to shock everybody so bad. They're like, oh my gosh, and the expectations are so low for these companies. So you're setting yourself up for all I would say is for the bears, I think they're at a real, if I was a bear, I would be covering left and right for the rest of this month. I would not want to go into this earnings season with how bad stocks have been hit, with how low expectations are, and knowing that historically the market does phenomenal in November, December, and then knowing if there's any sort of momentum that starts this market, fund managers that are already underweight in the market have to start catching up. I mean, if there's any bears that stay short through the month of October and going into November, December, they got to be either the most brave people in the world or just brain dead. One of the two, to be quite honest, because that is a risk. To be long and you already got hit on stocks, like it's no risk there, right? It's like, whatever. As we've already been used to the pain, bring some more pain on. Cool, we'll buy the dip. We'll buy more stocks for cheaper. For us, we don't even care. But for the shorts, this is everything, man. And if you've made good money as a short this year and you go into this situation and you get obliterated, all of a sudden, next thing you know, you lost money on the year. In a year where you should have made a fortune as a bear. Like, this has been the best year pretty much for short stocks we've seen since the great financial crisis. It literally is. And so if you're risking that as a short, and next thing you know, come the end of December, you somehow lost money because you took such big losses in November, December, oh my gosh, that would be pretty sad. Let's just put it that way, right? Because that was supposed to be your good year, right? Your great year. And if you got to take advantage of that, man. If you can't make money in that year as a bear, oh gosh, what are you going to make money in? Hope you guys enjoyed this video as always. If you enjoy the videos and you ever want to send me a DM, say hello to me on Instagram. That will be pinned comment down there. Also, if you're looking to join our private stock group and get access to the Tesla chat, Palantir chat, and all the other chats, check out the pinned comment down there. Much love and have a great day.